Hello, everybody. Welcome to our webinar today. Thank you very much for taking some time out of your busy and most likely crazy trading days in the evening to join us today. Today we got something very special for y'all, and I think you'll find a lot of value in it. Before I get started, I just want to do a quick mic check, make sure everybody can hear me and see my screen. Can somebody just confirm that in chat? Awesome. Well, again, thank you everybody for being here today. My name is Dan Ushman. I'm TrendSpider's founder, and this is our technical analysis webinar series. And today we have a very special guest, my good friend Rob here, the inventor of the Strat and coach at Quantedge and at T3. Rob, I just got to give a little anecdote here. Rob has the most impressive trading setup I've ever seen. I remember walking into Rob's office for the first time and seeing a wall of screens that exceeds reason. It's amazing, and it's one of the reasons that Rob is great is he actually knows where each chart on all 20 plus 100 of his monitors is, and can point at it. So I've always thought that's really impressive. So I'm very excited to have him here and have a chance for Rob to share the Strat with everybody here today. Before we get into the presentation, just got to throw a disclaimer up here. The lawyers make us do it. Any charts that we talk about today, any patterns that we talk about today, anything like that, is just for educational reasons. It's not, trading advice. We're not suggesting anything for you to buy or sell. Be smart out there because trading is really, really risky. Also, before I hand off to Rob, I just want to give you a 2-minute kind of overview as to who TrendSpider is. For those of you who are new with us or this is your first time, on one of our webinars, we are a charting software company. So we're a new startup. We're trying to build new charting software to take some innovative look at charts, tries to automate things that people do by hand. And we're relatively new out there, but we're all very passionate about trading. And we're building tools that are so much more than just charting, right? So, it all starts with a chart, but we've built backtesting capabilities, all different kinds of cloud-based capabilities, lots of stuff that I'll kind of cover after Rob is done. So you can see how it works with the Strat that you would normally have to do by hand. We've found ways to automate that. And this is a great list of the different ways that our tool is designed to help people, right? It's meant to speed things up, to make the analysis process more consistent and efficient, and in doing so, kind of take out some of the inconsistencies and biases and impatience and errors and fatigue and problems that people have simply because they're human. And we do that by automating the grunt work. So we're going to talk a lot about candlestick patterns today because the Strat is something pretty heavy in that, but we also automate all kinds of other things that people do with charts, like finding trend lines, like identifying horizontal price levels, like finding support and resistance zones, and so forth. So the way it ties together is we like to say TrendSpider is not just a new charting platform. It's kind of a new way to think about charts, right? And there's a whole different workflow for it. But the idea here is that you can set up your analysis, you can flip to your watch list, you can have the software do a lot of the heavy lifting for you on each chart. And when you see something that's interesting or might be interesting to you in the future, you can create an alert and outsource monitoring that to the cloud, where the software will sit there and do the watching for you so you can go about your day. And when your chart sets up, your conditions are present, and it's time for you to take a look at it, you'll get a text message to let you know. So that's it for the quick intro. I really wanted to keep that brief because I want to give Rob as much time as possible. Rob, you with me?
I'm here.
All right, I'm going to end my screen share and I'm going to hand it off to you.
Okay.
While I'm doing that, just so everybody knows, if you have questions, Jake from our team's in chat. He's there to kind of take questions, or you can also post them into the questions tab. If you have a question for me or Rob, just go ahead and do that, and we'll get to them as soon as Rob's done. So, Rob, you can go ahead and share your screen. You're on.
Okay, let me make sure you guys are seeing. Okay, you guys are seeing it. All right.
Yeah.
So I get very excited when I get to a new audience and people that aren't familiar with what we're talking about. Tonight's going to be fairly rudimentary, and the good part about that is what you're going to see and what I'm going to explain to you is very simple to understand, and it's going to make sense. And so one of the problems that has plagued our industry for so long is that there's so many different indicators and so many different patterns that people are taught to look for, that more often than not, people are trying to make a combo cocktail, if you will, and say every situation is different, and in this situation I have to combine this indicator with this with this formation or what have you, and you're always very confused because you're trying to do analysis and execute at the same time, right? And so we want to eliminate that, right? Because if you look at our industry, that most people, when you tell people you're going to go trade, they immediately think you're going to lose all your money, right? And usually they're right. And the problem with that is that if most people lose money trading, there's got to be a flaw. And the commonality is pretty much technical analysis. I'm not going to get into that tonight too much, but what we want to be able to do is simplify things where we are not subjective, where we are trading what we know to be true, right, as opposed to what we think or what we're projecting. For people who've never heard me before, just a little introduction on who I am. I'm from Chicago. I'm in Florida right now. But I started on the CBOE when I was 15 years old. I worked every summer through high school and college on the trading floors until I started full-time in 1989. So I've been trading for 30 years. When I started, I came down on the trading floor thinking out they just hand a bunch of money out, because in Chicago, you think of a trader, you think of a rich guy, right? You come down there and I got killed. Before he was even a member, I got murdered. And so I got all these books and stuff, like started reading everything, and nothing really made sense to me, because everything would say that there's different things and different conditions and what have you. So what I would do is I would immerse myself in the charts, and I wouldn't try to evaluate anything. I just wanted my mind to see the charts, 2,500 to 3,000 charts a day, that there had to be some commonality to something before there was big moves, during big moves, and stuff like that. It took me 20 years and another 7, 8 to refine it. But this is the culmination of about 30 years of work. And what you're going to see when I slow it down is it's very simple to understand. And one of the great things is when Dan and Jake from TrendSpider came to the office, and Dan, I think, made it 3 or 4 times, but when I would explain stuff this to him, it instantaneously made sense. And that's why I'm here now. One of my favorite parts is when I would point out certain points to Dan. It's like his most famous line, at least to me, was, "Interesting." I was like, see how that works? So let's get to it. So one of the things that we want to look at, this is a big monthly chart of the S&P, and you could look at anything, all right? Any chart, doesn't matter. All right, what you need to understand, I want to slow this down, is that from one bar to the next, all right, there's only 3 possible outcomes, all right? And we call them scenarios, all right? So from one bar to the next, you can do this. You see this bar here? It was not weak enough to take out the previous bar, nor strong enough to take out the highs or the lows. That's an inside bar, all right? That's scenario 1. Scenario 2 is you take out one side of the previous range. So you can see that here's the previous range on this. You take out one side, all right? Now, if we go to the daily, scenario 3, here. You take out both sides of the previous range. Here's the previous range. You take out that side and you take out that side, right? That's scenario 3. That's an outside bar. Now, the important thing about that is you can't go 3 without going 2 first. So this had to go 2 first and then go 3. Is that important to know? You bet it is, because if you've been studying technical analysis at all, you will see a myriad of patterns, bull flag, head and shoulders, what have you. What you need to understand is all that is very subjective, right? Because charts will present data to you the way they want to present it to you. And what I mean by that is that the time as presented by a chart will be uniform, which means that a daily chart is going to present the opening to the close, right? On almost every software. However, it also represents 6.5 hours. Therefore, if you started the chart at noon, you'd still have it 6.5 hours if you went till the next day, and that chart will look completely different, right? That's a problem, all right? And that's why when somebody uses just a daily chart to try and tell you where they think it's going, ludicrous. They're looking at a very small snapshot. So if we go back to the importance of the 3, one of the things that cost me 20 years of work Every book on technical analysis, everything would tell you that the broadening formation is a rare pattern. That is most ludicrous and possibly the biggest miss in any industry's history. That's one of the only things that can happen. So when you have an outside bar like this, on a different time frame, if you move down, it has to be a broadening formation. If you define that by taking out both sides of the previous range, you'll see this, and you'll see this. Higher highs, lower lows, higher highs, lower lows. Boom, there's your broadening formation. Is that important to know? It is. Because when you look at any other chart patterns, you'll also notice that for anything that you might read, that for every corresponding chart pattern, there's also a corresponding failed that pattern. What that means is what you see is irrelevant. The price could still go up or down or sideways and do nothing, right? That's true. However, because we know that this phenomenon exists, right? 1, 2, or 3, you have to, there's nothing else, right? Once you start coming back through a previous range, we know that outside bar exists. Therefore, once we come back through and failed 2, and we have follow through, we're looking for an outside bar, and then that can get a lot bigger, as you can see here, right? So the question is, when we know that, what can give us more evidence that that's going to occur, that will happen, right? Time frame continuity. Time frame continuity is so efficient compared to what you've probably heard before. And what I mean by that is, how do you determine direction, right? How's the price? What's the direction of the price? Some people will say, oh, if it's over a certain moving average, that's positive. Yeah, not so much. It's like if you look at any moving averages, you're going to see them getting ripped, right? When you look at monthly and weekly and daily charts of the S&P, you're going to tell me stuff like this here. All this was above the 200-day right here. A year ago, October, boom, and you're going to tell me that's bullish. There's no way, right? It's very inefficient. That's why they call them lagging indicators, which is an oxymoron. What's much more efficient is because that price doesn't actually move, right? It aggregates, which is different. Movement is a physics term. Aggregation is a trading term. Aggregation means that for every buyer, there has to be a seller, right? You have to match up or you have no sale. Therefore, if the price is dropping, the price is aggregating on the bid. It has to be, right? There's no other explanation for that. So when we have the price lower on the opening than the month, the week, the day, and the 60-minute, what does that tell us? That tells us by price and time, the price is aggregating on the bid, which tells us that the sellers are more aggressive. They're willing to hit the bid, right? That's important to know, right? Because if you've heard people talk about algorithmic trading, and maybe this week, algorithmic trading, saying, oh, they're picking me off and they're going back and forth. Wrong. Algos are your friends. If we go on the assumption or the knowledge that algorithmic trading is now 70% or more automated trading, right? We know exactly what they're doing. They're telling us what they're doing. So if you listen to people who say the algos are picking me off, it's a convenient excuse for not knowing what you're doing. All right? Because what they will do, let's look at the 15-minute here recently, right now, in the S&P. Do you see this? Do you see this back and forth broadening formation here? You do. If you got after hours charts, you're going to notice this is now down here, right? People will think, because they're used to using horizontal support and resistance, oh, here's my breakout. Oh, the algos are just picking me off. Oh, here's a breakdown. Oh, the algos are just picking me off. Wrong. The only guys that are picking you off are high frequency traders, which is a completely different ballgame. High frequency is just front running your order by millicents, right? Algorithmic trading is stupid, right? They have to tell the computer what to do. They have to tell it one of three things, All right. When you run an automated algorithmic program, you have to tell 3 things. What do you want it to do? When do you want to do it? And how are you going to do it? Right? So what do you want it to do? I want it to buy. When do you want it to do it? Now. By how would you like me to do that, sir? Take the offer. So when by price and time, the 60, the daily, and the weekly and the monthly are green, the computers are been told to take the offer. We know that, right? So when we combine this now, right, with what I just showed you, 1, 2, and 3, now there's only so many ways price can reverse, right? Because since you have 1, 2, and 3, therefore after there's only so many combinations that can be, right? So there's 3 major reversals, right? There's a few others. So no matter what people tell you about, you know, it has to be high capitulation volume and all that. No, there's only so many ways price can reverse. So if we go back to the monthly, and we go back to last October, and we'll get to more recent here, but I like to use these because last October was really pretty. Two in one direction, followed by a 2 in the opposite direction. 2, 2 reversal. 2 up, 2 down. And when I showed this to Dan, and he put it in TrendSpider, he's like, that happens a lot. I'm like, sure does, right? 2, 2 reversal. The inside bar, right? That's an equilibrium. 2, 1, 2 reversal. The outside bar, 2 goes 3. These are all monthlies from last October that led to that downside. So you can see this takes out that side and comes back through, right? Now there's a few others, but just by knowing those, right, you're good to go. When you combine it with time frame continuity, right, you have a reversal in the direction of the aggregation. It tells you what the computers are doing. It tells you when they're doing it. And it tells you you have a reversal, right? That's something you want to know about, right? Because when you hear somebody say, I'm going to buy something on a pullback, I'm like, what the hell does that mean? When it pulls back. I'm like, well, 2 cents, 5 cents. And then when are you going to buy it? When it comes into my support. What if it goes through your support? Well, I don't know. Reversals in most people's mind think of major reversals, right? You don't have to think in major reversals. Any successful pullback is gonna look like what I just showed you, right? There's a few other ways, but if you just look for what I just showed you back into full time frame continuity, you're good to go. So now if we take a look at the S&P, we go back to the monthly here, right? From what I just told you, let's go back to October, last year, and we'll come up to now. Is this a 2-2 reversal last October? It is. Is this a consolidation in November? Yes. Do you want to trade an inside bar? You don't. It's consolidating. It's getting tighter. So if you remember last year, if you got killed in October and tried to get your money back and got chopped up in here, that's what happened. What happened in December? The 2-1-2 directional move. Consolidation, breakdown here, right? Now, before it even broke, you can see the monthly opened here. Anytime this month that the week and the day and the 60 were red, we're looking for those reversals back into this direction, short side. So we know about this. We come in to start this year. Here, continuity changes back to the upside. Did we know about that? We did. All right. Now it comes back up in here. And do you remember what people were watching the McClellan oscillator in January? It's overbought on the daily basis, right? That tells you they're looking at way too short a time frame. I'm like, you're out of your mind. This just happened and you're telling me this is overbought? You're out of your mind. That was a buy signal. I got a news for you. A long-term oversold signal, longer-term oversold signals met with short-term overboughts as a buy. Inside bar, 2-1-2 reversal. Did we know about that? We did. 2 continuation, 2 continuation, 2 continuation. Then we come into May. What's this? 2 up, goes 3. Outside bar. Anytime you have full time frame continuity to the downside, short side. Did we know about that? We did. Then what happened in June? Pokes down, comes back in, failed 2, goes 3. Anytime you had full time frame counting to the upside, boom. Did we know about that? We did, right? So now we come in here and you get the 2 up, the 2 down again, right? And so all this stuff can be countered. Everything has to be reconfirmed or negated by the shorter term stuff, right? So if we go into what's just happening recently, here on the weekly SPY, this we went into the highs. Here was a 2-2 reversal on the weekly. Has this been changed? No. 2, 2, 2. Now we're going inside. Can you expect to get chopped up during an inside? You can, right? Because it's consolidating. So if you've been getting chopped up, that's why. Did we know about that? We did. So here's your inside bar. 2 on the daily goes 3. Did we know about that? Sure did. Boom. Continuation. 2 down. Now, there's ways to combine this stuff, right? Here. Now, this is a 2 down, but it comes back in potential 3. Now, if you remember what I said about how software is going to present stuff to you, right? On a different 2-day chart, you see this, these 2 would be an outside bar of this. We call that a compound 3. But when this goes 2-2 reversal here, right? You're still in conflict with the month, right? Still red. So this is last week. So where do we go? We look for things like Okta. Inside day 2-1-2 continuation. This is that same day right here. You see this? This is the 3rd. And this is the 3rd. So when this comes back into the range and changes continuity back in here, we know to look for anybody taking out yesterday's highs. Why? Because anybody short here, they got what they wanted. The market tanked. But if you're short stock and it starts coming back up on you, right, we know you're going to have to cover, right? So we go to Okta. Inside day. Look at this thing. Power up. This thing took inside day above 103.99 and is now at 118 and topped out there in 3 days before going 2 down, right? It also had full time frame continuity to the upside. Here, there's your month going up. Week green going 3 outside bar. Did we know about that? We did. All right. And the daily, taking care of business like that. Also had Coop. Coop. Here's your 2-2 reversal on the daily. Here's your inside day. Right? Once again, that was on the 2nd. Here was the 3rd. Did we know about that same day? We did. This thing blasted off of here from 134, high of 144, $10 that day, and still didn't stop out until here on a 2-2 reversal daily, which as you can see, monthly green. Weekly was green, bright green, right? And now compound 3. These are 3. And so 2-2 reversal is 2 in one direction, 2 in the other. Let's see if we can get some questions here in a little bit. But I want you to get this very, this is very rudimentary. We can go into a lot more on this kind of stuff, right? But you want to know that algorithms are your friends, right? Definitely without question that algorithms are your friends because they're telling us exactly what they're doing, right? So if we look at something like Ulta, right? So Ulta, did we know Ulta was in trouble? We did. So here, look at this. And there's a lot of the gap. There's your 2-2 reversal down. Now, right, it attempts to go 2-2 back up, right, on the month. But what happens? The 2-2 reversal on the weekly kicks in below 245. Right, there's $7 right there. Did we know about that? We sure did. Daily, here, the inside bar. 2 goes 3. Did we know about that? We did. As this continued lower to take out that 245, it did. Right? Did it have full time frame continuity to the downside? Did. Right? Now you got your inside day. So it's either going to be a 2-1-2 reversal or continuation, but we've already known about that. And here you can see this. You're going to see it. Once you see this stuff, you're going to see it in everything. Right? 2 down by taking that out. Inside bar. 2, 1, 2. Reversal back up. 1, 3 down. And so I've shown Dan a bunch of these combinations, right? That we can see all these kind of things. And it's in everything. Once you understand it, it's very simple to understand and see. It doesn't mean it's always easy because threes can exist. So if we go to monthly in the gold, all right, let's go back to the monthly gold and the recent rally, if you will, here. So here on the lows, here's your broadening formation anyway. Inside bar, there's your 2 down from there. Your inside bar, your 2, 1, 2. Your 1, 2, 1, 2 continuation. 2, 2, 2 reversal. 2, 2 inside bar, 2, 1, 2 reversal, and bam, and then 2, and then 2, and then 2, and now 2 potentially goes 3. But you can see that on the monthly. We go all the way out to yearly charts, then quarterlies, then monthlies, and break it down from then so we know exactly where to be. When you go to higher levels of volatility, the 60-minute can be as important as a monthly because it's moving around that much, right? Volatility can, you'll have as much volatility in an hour as you maybe have in a month. That's great. That means we can be trading up a storm, right? Does it work on Forex? It works on everything, anything that trades because price action is uniform, right? So once you start to see things our way, this way, let's say Roku today, right? One of the great things about this is once you become a part of the community and you understand this, right? If you look at my Twitter, there's 23,000 people use hashtag the Strat. We all think the exact same way. There is no more subjective analysis. Have you ever been in a chat room and like, I don't know, let's ask my guru. Once you know this, you are the guru. You don't care what anybody thinks, right? It's a matter of which ones you're going to trade and all that kind of stuff, right? So if you go to Roku, you can see Roku had the big dumper, right, which was nice. And here's your 3. 2 goes 3 on the weekly, right? Did we know about that? We did. 3, 2 is a continuation. Boom, right? And then what happens? Inside week and back up. So you can catch the 2 goes 3, the continuation, the 2, 1, 2 reversal and back up. Not that hard once you see it our way, huh? And then you get to the daily. Do we have full time frame kind of the upside? Yes. Then we break it down to the 15 this morning. Is this an inside bar? It is. Is this a 2, 1, 2 continuation? It is. Is this one also? Yes. Do we know about that? We did, right? And so following along, when people say you can't chase, it's a matter of knowing why and how to do it. You certainly can, right? You certainly can. And so I wanted to only have like a little rudimentary understanding of this for you. Hopefully, if this is brand new to you, this is fascinating because what you're going to see once you see things this way, it's in everything. It's in everything because it's impossible for price to trade outside of this, right? It can't not be 1, 2, or 3. It can't. You have to have time frame continuity or you don't, or you're in conflict. Period. It's impossible to change. So when people say markets are always changing, that's not true. Price is always uniform. It's always had to do this. The only thing that changes is the speed and method of execution, right? So once you understand that, I'm going to show you my friend Steve Burns, who, if you know him from Twitter, is about 190,000 followers. He's one of the top influencers on Amazon of financial books. He's probably read more than anyone there. I wrote an article, What Do We Know to Be True, for him in February with this exact same stuff. He tweets it out all the time. And at this point, I wouldn't be surprised. He told me it's getting close to being the most read thing he's ever had. Because of all the things he's ever read, it's a lot of rehashing of well, this could be a thing in a box. No. And I said, look, once you understand this, then your work begins, right? When you sit there and have to try and figure out what indicator is going to work when and doing this, all there is 1, 2, 3 in time frame continuity. That's all there ever can be, right? And so that's when things really your work really begins. And so here's part of the article, but one of the things that's important that everybody should have is all the things I went through. And I went through, you can go through yearly charts, anything, SPY, yearly, all that kind of stuff. But I wanted to leave with this, that once you understand what I just told you, right, you take this to heart, you're going to get all those indicators right off those charts, right? They just blind you. I already know what your winning and losing trades look like. And if you keep this checklist up and you go through any of your trades, you're going to see them right. A scenario 1 is consolidating. It's getting tighter. It's bad. Do you want to trade that? No. So your losing trades look like this. You got chopped up in a scenario 1, right? Which would be this week. If you're getting chopped up trading the S&P this week, you're trading an inside week and you didn't know it. Scenario 2 going against you, right? That means you're fighting a trend. It's breaking in one direction and you're trying to buy it. That's a losing trade. A 3 going against you, it means you got a breakout and you didn't get out and it fails on you. That's when you really get killed. If you've ever done this, made a little bit, made a little bit, made a little bit, and then you get killed and give it all the way back, you got 3. All right. And that's because your mind is used to seeing a certain level of volatility, and volatility will expand and contract. Right. And if you are trading in something that's in a tight range and stuff like this, and then it starts to expand, that's when you get murdered. Right. And that's when we step in. If you've ever seen people that post something, this is going on my do not trade list, that's exactly when we want to trade it. Right. When they've had enough, they've built the triangles are getting bigger for us. Time frame continuity going against you. That's a losing trade, right? You're fighting it, saying, I think it's going to hold support, but you've got full time frame continuity. The downside, it's going to smash right through that, right? Because they're hitting the bid. Winning trades look like this. Scenario 2 in your favor, right? It's breaking one side and you're on the right side and it's going that way. Scenario 3 in your favor. That's a buy the dipper and coming back and going through, right? Time frame continuity in your favor, right? It has to. Right. And you might, even if you said, I traded a 1 and I made money, you had some continuity going your way. It's impossible not to if you made money. You had some continuity. I don't care if it's a 1 minute or 5 minute, you had some continuity going your way. So if you keep this checklist up, you'll know what you're doing. Also, it's important. A lot of people don't do this, especially when they start out. When you make a trade, say out loud what you're doing. Right? I've had people that will videotape or have the webcam up of themselves trading and go back and review it. And they can see themselves stressing out. They can see themselves not doing. When you say out loud, I am doing this because, right? Then you're sure. And if you're wishy-washy at all, don't do anything. But in your mind, you can play big tricks on yourself. Well, I'm just going to do this because of that. Say it out loud. It's going to sound so stupid, you're not going to do it, right? Or hopefully you won't. But when you do it this way, I am buying because it's a 2-1-2 reversal on the week. It's a 2-1-2 continuation on the 15, right? It has full time frame continuity to the upside, right? Because it's directional, I'm going to stop myself on the bottom of this bar here, right? Say it out loud, right? So I could go on and on. I've got a lot. I mean, I always one more example because I know Dan likes to. He's like, let's just get through this. I'm like, but make sure that everybody knows. So another thing that is good about this is something called a simultaneous break, and that's when you saw those monthlies in December and October last year or January this year when everything's breaking in the same direction. There ain't no way that thing's reversing. There's no way, right? Simultaneous break, and that can be down to industry specific. It can be a lot of things. So just recently, if you look at XLE, you're going to see this. You see this? It gaps up and comes back down. Very close to the 2-2 reversal. Boom. Did we know about that? Yes, because these things been a week. 2-2 reversal in XLE. They gave you in slob. Here, 2-2 reversal. It was industry-wide. EOG. Boom, and these things are still going. Did we know about that? We did, right? So there's a lot of aspects that give you exactly where to be, why to be there all the time. As far as what I do is I almost give this away on my YouTube and whatnot. I teach it. I moderate it. I do the research. And I run a community of people who have been doing this for a very long time who are very good at this. And once you understand this, as of right now, I have people who are training their kids to do this, right? I've got Blaine at Ohio State, his sister. My youngest trader just turned 13, and they took her out of school. She was going to go on to 8th grade, and she is being homeschooled because she's trading so well, because it's like a video game. So when your kids are used to playing video games, what I'm showing you is how to show them as a video game without having to think of all this stuff. It's like Tetris. 2 goes 3, 2 goes 3. Do we have time for them? Yes, boom, go, right? So, and you also in the chat here, I'm seeing there's a lot of people that are here that are in the chat that don't have to be here. They like to hear it over and over. But if you're new here and you're seeing these people that are typing this stuff in, these are people who want you to see this stuff to help you, right? They're going to verify what I just told you, right? And sometimes they're like, maybe we'll pick up another morsel from Rob, maybe we won't. But they've been with me for a long time, and they're telling you, I'm right. Listen to him, and you will be happy. All right, because it's not about getting your subscription money. It's about changing an industry and helping people to understand that it's not that hard once you see things our way, right? And being in a community where everybody thinks exactly alike, we can communicate very quickly. We don't have to have subjective, this could be a thing, this could be a thing. It is what it is. It's got continuity, it's got this, it's go time, right? And so for people who are having trouble following along tonight, that's okay. There's just a rudimentary understanding, right? And that's what I wanted to get done tonight, especially if you've never heard this before. I understand that it's brand new, but as one of the reasons I'm here also with the TrendSpider is that what you're going to see is not only TrendSpider, you're going to see software being converted into this, right? You're gonna have your Bollinger Bands and all that crap eventually gonna be gone, right? Eventually, this is too efficient. So we already have scans for different software, but when Dan Jake came over, they were quite convinced this is something they wanted to be a part of, right? And so at this point, I want to leave it at that. Like I said, I might have gone a little bit longer, but I get very excited about it. And Dan, if you're there, thanks for having me. And
that was fantastic, Rob. Thank you.
Thank you.
There's a bunch of questions coming in. We can track those and tackle them in a couple minutes here. If you guys want, there's a questions tab that makes it easy to keep track of them, so they don't get lost in chat, and we'll make sure to cover them. Rob, you want to pass the screen back?
Yeah. So let me go to actions and disable. There we go.
So thank you so much, Rob. I think, I've seen, and when you're in this business, you see a lot of trading strategies, right? I come across them all day long, every day. A lot of people ask us to build their strategies into the platform, and we don't do most of them. In fact, most of them, we turn away because there's nothing unique about them, right? There's no, they're just another fancy indicator, computed off the same data that everything else is computed off. And there's, 20 different ways to measure if something's oversold, right? We don't see a huge lot of reason for things like that. The Strat really caught my eye because it's different, right? So we've implemented a lot of different parts of it in the TrendSpider platform. So if everybody can see my screen here, this is, TrendSpider. This is my account. I think I have SPY open here. Right. And, the first thing to kind of know about this tool is it's a charting tool, right? Like any other. So you have your charting capabilities. You can change time frames, you can change symbols, you can have watch lists, all that stuff, all your indicators, right? But then we also have a lot of tools that are built on top of that to automate things. So, we can detect trend lines. And, Rob really likes detecting broadening trend lines. There's configurations that do that. You can see some of that on the screen here, where the system will pick those up automatically. We've also tied in a ton of the patterns from the Strat. So there's actually a whole separate category. Rob was gracious enough to give us permission to do this, where you can select it, and there's I believe 50 or so of these, or 40 of these built into the platform. So what you can do is you can say, okay, I want to see anytime a 312 reversal, Chicago reversal shows up on the screen or on a chart. You can push that button and the system will pick those up for you automatically, right? So this, for those who are new to this, right, this is a great way to learn, because you have to kind of train your eye to be able to identify what's a 1, 2, or a 3 kind of intuitively. And this is a great way to kind of pick up on them without having to squint at the chart and try to figure out each one. It'll highlight the kind of pattern that's, you're looking for. And, as I mentioned, there's a bunch of these, right? Some of these, these 1-2 breaks happen quite a bit. You see them, pretty often, and some of them are pretty rare, which is sometimes you won't actually find, some of these on every chart. So that's one way that we've got this built in. Here's a two up kind of combination. You see that all the time. This is, I think, the one that had to message Rob and be like, this just happens all the time. But you can see how easy it is to just select patterns and have the system identify them for you on the chart. The other cool thing is you can create alerts and highlight things like inside bars, outside bars, right? So that's built into the platform, and it gives you the ability to quickly highlight them so you can see when they're happening. What's cool about a lot of these patterns is you can create alerts on them and have the system actually watch a chart and let you know the next time that pattern forms, right? And you can do that using the multi-factor alert tool here. You can create a condition, and you can select a time frame, and you can select a pattern, and you can choose, which pattern you're looking for here. It can be a 3, 1, 2 reversal. And you can create the alert and have the system sit there and watch SPY for you and let you know anytime that pattern shows up. So that's one of the ways. Another cool thing about this is you can backtest these things. So you can actually see and do math. You can say, look, if I buy, or sell or whatever, this is probably not going to work out that well because it's a down reversal. But if I buy every one of these and I sell either, call it 30 candles later, or when I make 5% or when I lose 1%, you can test that and see how that would have played out on a particular chart, which is cool. And you can also plot the actual moves on the chart so you can see how they would look. And you can flip through different symbols and test this out and see how that would work on those symbols, right? When the conditions exist, which isn't always. There's a lot to this TrendSpider platform beyond that. I really wanted to keep this session just focused on the Strat. So those are 3 of the very basic ways that you can utilize it in the platform. You can use it in alerts. You can have it automatically recognize patterns. Dave, I'm sorry. Did I turn patterns off? Thank you, Jake. You can have the patterns on. Dave, you can using indicators, and you can using time frames on alerts across 5 separate time frames at once, right? So that's something that's built in. So you can create an alert, for example, where you're saying, okay, I need the 5-minute price close to have increased. I need the 15-minute price close to have increased, and so forth. Scott, yes, we do. The system will automatically recognize them. In many cases, you can just enable it this way. I have my filters tuned down a little bit, but the system will pick up channels, wedges, triangles, pennants, broadening formations pretty well automatically. There's a different set of settings for that. And one of the cool things about this, by the way, since I'm showing you this, is you can then create alerts on this. So, if you trade this type of thing, you can right-click it and then say, alert me when price breaks through, touches, or bounces, off this trend line. And you can do that on whatever time frame that you want, and you can have the system sit there and monitor it for you as well, which, if you're watching a lot of charts, can save you a lot of time and a lot of eye strain. Jeffrey asked if you can scan for patterns inside, upside bars on different time frames. You can. You can't scan, but you can create alerts for that. Scanning is coming very soon. That's one of our up-and-coming features. But you can create an alert where you look for a particular pattern to be forming on different time frames at the same time. So you can say inside bar, any on the 15-minute, and you can add additional conditions on other time frames where you look for the same type of thing. Right, or different similar things like breaks, things like that. Okay, so let's take a look at the questions tab here, and see what's going on here. DD asks, can you scan inside, up, or down on 60 minutes as it's forming? You can't do actually. That's one of the limitations of the platform. That's something that we'll address in the near future. But you can't scan for these while they're forming. Right, the candles have to close, so that's definitely one of the limitations there. Arnie asks, can it draw broadening formations? Yes, it can. Jeff wants me to zoom in, so I will zoom in. See if there's any other questions here. Okay. It might have been. Thinkorswim recently retired one of their profit charts platforms, which a lot of people like to use, that had some pattern detection tools in it. They don't offer that anymore. Joe asked, "Your 60 seconds start at the top or the bottom of the hour?" They start at the bottom of the hour. I believe they open at the bottom of the hour would be the correct answer to that. And then can you show some broad information? Yeah, so you can see a lot of them by turning on the more lines filters. And what you can do is you can then you can double click on them to lock them into place. So if you like this and this, you can double click on that and turn the filter off, and it'll stay on your screen just like that. It'll pick up all different kinds of formations. You can actually customize the trend detection to work a lot of different ways. So you can set it up to look for short patterns or long patterns, based on your preferences. Robert, it's not a scanner. You can put a watch list in as big as you want, and you can go through them. The difference between scanning is you can't search the market for it to give you symbols that match a certain pattern. You can watch symbols that you've already told it to watch. We will be adding scanning, though, as I mentioned before. So any other questions? Any questions for Rob? Okay. Well, I won't bore anybody with any more stuff. Jane, the data providers are BATS, NASDAQ Consolidated, and a list of banks for Forex. I'll post a link into chat in a second so you can see the whole supplier list. Everybody, thank you so much for joining us here. I just wanted to put this last slide up here. If you liked what you saw here, you want to try TrendSpider, we offer a 20% discount for people who attend these webinars. You can use the coupon code WEB20 for that. If you want to learn from Rob, there's a link here. I'm going to post this link in the chat as well, where you can get a trial of Rob's education and coaching service for like $50. It's definitely worth it just to get a little time to learn from the master himself. I guess I'll leave it there. Rob, any last words?
I'd like to thank everybody for coming out, especially people who've never heard this stuff before. If you can rewatch this or even go to my YouTube, Smiths in the Black, and just let it sink in a little bit. I know for newer folks, it can seem a little more confusing. However, it's great in its simplicity, and it's never going to change. So I hope you take a look at it, and I really do, because when I see the confusion in this industry, it really tears me apart, and that's why I work so hard to make sure everybody gets it. Like I said here, 30 days, $49. If what I'm telling you is true, it's like I'm just trying to keep the lights on, right? You got to get these guys going. Yeah, I'm going to sell you $5,000 of education. Look. It's like, if I can't show you this to in a month, it's not as simple as I say, right? So just try and do that and come see us. And like I said, you've seen a lot of people in here who've been with us for a long time. And I thank Dan for having me here, and Jake, and getting the software, and they're working on it and all this kind of stuff. And it's going to be really good. So thanks for coming out, Dan, Jake, thanks for having me, and everybody have a good night, and hopefully see y'all soon.
All right, thank you, everybody. Rob, real quick, Scott asks, can you use options?
Yes. Anything that trades, because any tradable vehicle is going to line up with this. Obviously, with options, there's going to be some variables, obviously, on the mechanics of it, but how things move is always going to line up with what I told you. 1, 2, 3 in time frame of continuity can't not be.
When you're saying inside bar, are you speaking of a 1 or a candle that closes?
It's a 1, yes.
Yeah, 1. And you can pattern recognize inside bars. It's a great way.
Oh, you guys, yeah.
To find them. Okay, well, look, everybody, thank you. It's late. It's Wednesday night. We're gonna let everybody get off here. I'll stick around and chat for a few more minutes and just cover any questions that are coming up. But thank you again, Rob, for being here, and thank you everybody for joining us.
All right, thanks, Ed. Good night.
Good night.